Hello and welcome to Asking for a Trend. I'm Allie Canal, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we'll be diving into. Stocks rallied Tuesday after CPI data is released, and investors like what they heard. At the end of the session, all the major indexes ended the day higher. And in the wake of tariff policies' ups and downs, some small businesses seem to remain optimistic. We're talking to an expert on the small business landscape. And the retail investment landscape is also showing resilience. We're taking a look at what back-to-school retail shopping might look like as summer comes to an end. Well, with summer spending winding down and back-to-school shopping underway, it's a good time to check in on the retail investment landscape. For perspective, we're joined by Naveen Jaggi, President of Retail Advisory Services at JLL, which just released its Q2 retail market report. Naveen, welcome. So retail investment volumes, they were up 23% in the first half of the year compared to 2024. What's driving a lot of that resilience, and do you expect that momentum to carry through into the end of 2025?
The U.S. consumer continues to amaze me. They find ways to spend money. In spite of all the tariff talk and the different things going on in the economy, they keep finding a way to spend money. Now they're shifting their spend quite a bit. They're looking for the longest spend on their dollar, so they'll go to places like Walmart as opposed to maybe going to a higher-end Macy's department store, for example. But they're still getting the biggest bang for their dollar. They're spending money, and that's what we want to see. That for them, they still feel like their jobs are pretty fair, pretty safe, their wages are pretty safe, and as a result, they'll find a way to continue to spend. That's a good sign.
So you hinted at some of that trading down, and we have seen deep discounts, consumers really jumping on to take advantage of some of those opportunities. Is that a sign that consumer demand is healthy, or maybe a warning that shoppers are only going to spend when prices drop?
I think there's a little bit of concern now. We've certainly seen that the labor market's gotten soft. We saw the job adjustment reports from about 2 weeks ago. That tells me that the consumer's feeling a little bit of a pinch on the labor side. So if they're going to be feeling a pinch on the labor side, they're going to start thinking about where they can get their dollar spend more. So whether it's TJX, Marshalls, Ross, Dress for Less, Dollar General, the value retailer, we've known now since the great financial crisis the consumer will spend at the value sector more than they will at the other sectors. I think this is a continuation of that. Don't be surprised by that. Actually, that's pretty common nowadays. Even in the upper household incomes, they will go spend at the dollar stores when it makes sense for them. That will be a continuation of the U.S. economy for me.
So I'm curious, when you do these reports, how closely correlated is the strength of the consumer to the labor market? And when the labor market is struggling, do you see that in your results?
Absolutely. So the consumer will tell us that they're going to pull back a little bit here and there. Here's what they're doing. They're saying that for back to school and holiday shopping, they'll spend. But they're spending on essentials. They're not buying discretionary dollar spend. They're buying the essentials for school needs. So that continues on. So I don't look at back to school as a barometer for how healthy the economy is, nor do I look at how sales are at Christmas time. I look at the sales in between those gaps and see how consumers are spending. And so to me, I'm going to watch September and October sales and see how those trend versus last year. And to me, with all of the retailers pushing their inventories forward to get you to spend the money sooner, I think that's going to be the big tell. Will consumers spend money in September and October to avoid the tariff impact for the product that's coming in October and November? Watch that, and that'll tell us how holiday sales will go.
Has that been a trend in the past that they're spending earlier, or do you think that's solely due to tariffs?
I think I'm watching it more closely. In the past, we saw the holiday sales moving up to early November, late October. Now we're seeing more promotions and more talks about retailers spending their sales marketing monies on September. To me, that tells me that they got the product in before the tariffs came in, and that's going to push that product on the shelves for a sooner and a quicker sale. Try to capture that consumer for a one-stop shop for all their products.
And what about brick and mortar? Your report showed that store openings outpaced closures in the first half of the year. How's the brick and mortar business?
Brick and mortar is fantastic. Look, for all the talk of online sales being 22% of total retail sales, that tells me that 80% of all retail sales in America today take place at the store. That's a pretty good story, considering all we've heard about for the last few years is that consumers continue to buy online. They may be influenced by buying online. They still like to go to the store and shop, especially things like groceries.
Yeah, I was going to say, does it depend on the product when it comes to whether you're going online or in store?
Yeah, they want groceries, for example. We thought back in the pandemic that people would never go back to the grocery store. There was an estimation that people would stop shopping at the store and buy online. That did not happen. As soon as the barriers came down, you get back to shopping, you started going back to the store. So grocery stores, at one time, 3% of total grocery stores were online. Now it's like 6%. So it may have doubled, but it's still a small portion of the overall sales for groceries.
And have you seen companies like Amazon, for example, take some of that market share away from some of those smaller players when it comes to online shopping?
You cannot ignore Amazon. $24 billion in sales for Amazon Prime for 4 days. They doubled their numbers and they went from 2-day sales to 4-day sales. They did more business on those 4 days than we do on Black Fridays. That gets to tell you Amazon is an absolute monster in the business. Can't ignore them, accept them.
And you were just mentioning the trade developments, how consumers are weathering tariffs. How about on the retail side? How are retailers battling this? And we have heard during this past earnings season that they're actually absorbing a lot of those costs right now.
They are. I think most retailers recognize that the tariff environment we're in is not something that's sustainable in long term. It's a political negotiation play. So as a result, retailers will say, we don't want to scare the consumer off and make prices to the point where they're sensitive to price increases, so we'll absorb them. So we may see some hits on the bottom line by retailers, but that's short term. Most every retailer I speak to thinks that the market will be different, much different from a tariff environment next year, so they're willing to hold on to those prices and not push those to the consumer aggressively.
Do you think there's a point when retailers aren't going to be able to do that and they're going to hit a point where they have to pass on some of these costs?
Absolutely. I mean, if you look at the stuff that's being made in India, right? So we just saw recently that Brazil and India were two countries that got pretty significant tariff hikes. If those things don't subside by the fall and winter, those prices will be passed on to the consumer. So to me, I'm watching Q1 and Q2, watching the news. If those countries come to the table and negotiate well, you'll have a good story. But if we don't see those negotiations go well for the consumer or for the retailer, prices will go up, and that will have a lag on consumer confidence.
And you were just saying how you speak with retailers pretty consistently. Yeah. What else are you hearing? What are the takeaways from you about this really volatile environment where it is hard to plan for the future?
Think long term. They're not going to react in the moment. They know consumers, for the most part, are a bit confused about the environment right now. They're saying, wait a minute, are tariffs going up? Which countries' tariffs are going up? They don't know exactly what product will be impacted. So in that environment, the general consensus is, let's not shock the consumer with too much price increases. And the consumer, by the way, is pretty darn resilient, as we've said over and over again. Last piece to remember, about 20% of the top household income earners in America represent about 50% of all consumer spend. They're the ones doing great. Like the 401s are doing great, the 403s are doing great, the markets are up, almost every major indices is either up or at near-time highs. They're doing well. As long as that top 20% continues to spend money, the overall landscape looks pretty darn good. Now, long term, you're worried about the wobbly labor environment, that could impact that middle market consumer that's saying, wait a minute, if you look at Chipotle and you look at Cava, and those things are higher priced items, will they start moving back to KFC? Will they start moving back to McDonald's? Will they start moving back to something a little more affordable? That's what I think we need to be watching in the Q3, Q4, Q1, 26 environment.
And to that point, we just got Cava earnings. The stock's off around 20% right now because they are struggling now. You bring up a good point about the bifurcation of the U.S. consumer. Higher income, doing well.
Doing great.
Middle, lower are starting to struggle a bit. How have you seen that reflected in some of the data that you guys do, who you talk to? And what's the concern longer term if we continue to see that bifurcation?
So I think my biggest concern is that the U.S. consumer, if they feel like their environment is not in their favor, right? So what we heard was that the market should be in their favor, that the president's going to make laws and policies to benefit middle America. If those don't develop in 26 and they start showing some sense of lack of confidence in that environment, you're going to see the consumers start to pull back because the jobs aren't there like they were supposed to be there or they were promised to be there. If you put that doubt in the consumer's mind, that's when you see the retailers start to worry about their plans for 26 and 27.
Markets closing higher after digesting a key piece of inflation data. For more, we're bringing in Yahoo Finance markets and data editor Jared Blickery. Jared, it was a record-setting day today on Wall Street.
Yes, it was. We got a really nice reaction right after that report. Stocks went up and they really didn't look back. So my first takeaway is CPI for the risk market win here. And we'll take a look at some of the results. And first up is the NASDAQ Composite. That is not even the strongest market of the day. That would be the Russell 2000 and some of the small cap indices. But here we have the year to date, and you can see nice pop here. This happened over the last few days, so looking good there. You take a look at the S&P 500, record right there. And here's the Russell 2000. I like this because it's just breaking out of this consolidation area. This is not a record high. It's not even close to the record highs. I got to show you, let's do a 6-year chart, and you can see it's still underneath these highs that we had late last year. So a little bit of some more work to do for the small caps, but nevertheless, a solid day in the indices. And you take a look at the sector action here. This is all green. We like to see this. We see the cyclical sectors. Those are the ones that respond to the economy growing. So communication services, tech, materials, financials, there's some gray area with the sectors, but mostly this is a cyclical driven rally today. And so I think that's pretty bullish for the most part. I did want to show you one more thing. I almost forgot about this. I prepared a little chart. This is the S&P 500 in white going all the way back to the beginning of the bull market. In green here, here, we have the CPI day reaction. So this is what the S&P 500 did on CPI days only. And we got that nice little bump up today. And we haven't had a bump up that big since over here. That was kind of the beginning of the year. So people have, why am I showing this chart? It's because people have been saying the jobs market is where the action is. Well, markets still care about CPI. And if markets and investors care about CPI, Allie, so do I.
So do I too, Jared.
Right.
But that's such a good point because we haven't really seen that reaction over the past few months, but clearly that was evident today. And I love that you brought up small caps and how that is starting to climb out from those lows. And small caps are really a sensitive area.
The red-headed stepchild. Oh, you got a segue there. So let's not step all over that beautiful segue. We got to talk about bonds. So bonds basically kind of smooth out the kinks. Did they do that in 22 and 2023? No. But they also provide income for your portfolio. So that's something that we keep in mind as well, especially for older investors like me who are approaching retirement in a few decades. With a few decades.
Jared, you don't look a day over 20. Come on now.
That.
But let's talk about volatility because that's something that we've been discussing as we gear up for Jackson Hole and some of these other moments that maybe you do have a more volatile stock market.
Yeah, so when we talk volatility, we got to talk the VIX. And that, a lot of people call that the fear gauge for the market. That is kind of imprecise, but also it's almost there. So let me just show you a chart I prepared as well. The green line is what the VIX has done this year. And look at this big spike. Okay, that was the Liberation Day. We saw stocks dump to the south side there. And when stocks go down, that's generally when the VIX is going up. So you don't want to see that. Now in white, I have the average VIX price for every day of the year going back to 1990. So this kind of provides a map for the rest of the year, well, the whole year, but we're interested in the future right now. So you will see that this generally trends up into the middle to the end of October. That is when we see a lot of historical market crashes in September and October, but volatility picks up right now in August. From then, it kind of dissipates into the year end. You get that Santa Claus rally. That's when you don't have almost any volatility. But right now is what we're concerned about. So if we do increase in volatility here, it doesn't mean that stocks have to go down. It just means that the ride might get a little bumpier. So take that into consideration.
Right, and we've been hearing that from strategists that we could see a bit more chop in September and October. Jared, thank you so much.
You bet.
Appreciate it. The NFIB Small Business Optimism Index rose over 1.5 points in July, driven by improved business conditions and expansion plans. Yahoo Finance's Julie Hyman spoke with the Big Idea podcast host Elizabeth Gore about the state of small business.
You know, well, one is the time of year. Back to school is a big time for receipts for small business owners, but also things are settling down. There's less confusion about the tax bill, less confusion about where tariffs going. So optimism means there's going to be a higher spend on software, and we're going to see more folks hiring for their small business.
Okay, so that's the good part of it, right? But the reading was just slightly above the 52-year average, so we're still around average sentiment. I guess I'll take the other side of it now. What are the things still weighing on sentiment?
They're waiting. You know, there's a federal course right now, case that 5 small business owners sued around tariffs. So I think there's a lot of eyes on how tariffs really are going to impact small business in the long term. We're also waiting for deregulation that's been promised. And then capital's still quite expensive. So we're still kind of waiting for capital to catch up with this excitement.
And so the folks that you're talking to, how are they sort of processing with and dealing with all of this in real time?
You know, post-COVID entrepreneurs, they can iterate faster now. They know problems are going to come that are unexpected. And so they also are smarter about keeping more capital in the bank. And so they keep, you know, used to be it was about 4 weeks. Now we're seeing 2 to 3 months in the bank. So if there are tariffs that come through or a natural disaster or something that happens, they're not as frightened about it and they're prepared.
I'm also curious about the rate cut outlook, right? Because the cost of capital for small businesses has been at a higher level for a while. So I imagine they're looking, are they also waiting for that potentially?
Absolutely. So what you're going to find is larger capital purchases, they're still going to wait. So if I need that new oven, if I need that new truck, anything that's going to have a little bit higher credit or loan, we're still going to see that waiting. However, they're going to spend incrementally more in a small way on things like software, on efficiencies, any kind of payable, receivables, anything that can help them with their efficiencies. You are going to see a higher spend on that.
And if we are seeing improving sentiment on Main Street, what's the kind of ripple effect of that?
Well, if I'm the Fortune 1000 and I'm selling into small business, so let's think PayPal, Intuit, Square, Dell Technologies, this is a good time to really sell into small business. So anything that's supporting the small business market, I think you're going to see an uptick in their stocks and also their sales.
Gotcha. And then I'm also curious how the folks you're talking to are incorporating AI.
Oh my goodness. Well,
you were talking about efficiencies a minute ago,
absolutely.
right?
I'm really excited because we went from a 7% adoption of AI on Main Street to almost a 26%. Might seem low to the corporate folks, but for small business, that's extreme. The Inc. 5000 list is coming out this week, and we're excited on the big idea to release it Thursday. And for the first time ever, there is an actually AI sector of the fastest growing businesses for small and medium businesses. However, if you look at large percentage growth like construction, government services, those are all now AI-enabled businesses. So even Main Street is adopting AI through and through, and those are the fastest growing, even in categories you wouldn't think are actually using it.
Let's do a final check of the markets because it was a record-setting day on Wall Street. The benchmark S&P 500 closing above 6,400 for the first time ever. This is a brand new all-time closing high. We also saw gains across the board here with the Dow and NASDAQ also up over 1%. And this comes on the back of that better than expected CPI print. Now, we did see firmer readings for core prices. This removes volatile categories like food and energy. But it seems like today investors largely looking through that. At this current moment, the tariff pass-through effect, it's not as significant as investors initially feared. And that's having a ripple effect throughout multiple areas of the stock market. You can even look on a sector basis. We have all 11 sectors finishing the day in the green. You're seeing gains led by communication services, tech, materials, and then your defensive plays, utilities, consumer staples, energy, real estate. Those are your bigger quote unquote laggards of the session, but again, still a sea of green here on Wall Street. But that's a wrap on today's Asking for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.